The next 4 years, this is the early period of corporate adoption, institutional adoption. This is the period where BlackRock can go from nothing to having 100 billion or hundreds of billions of dollars of Bitcoin, right? So there's a struggle of who will securitize the ETF. And then this is the period when we'll see, some major banks, banks in South America, a bank at Itaú, or banks in Europe or banks in the US that will become Bitcoin custodians. Which one and who will be the leader in that space? Well, we'll know by 2028. We're still waiting to see. And this is the year when you'll start to see large corporations adopting Bitcoin as a treasury asset. We'll have fair value accounting, and it'll become much more normal. And you'll start to see a universe of 20, 30, 40, 50, 100 companies that have some Bitcoin exposure. And I think once you get to 2028, from 2028 on to maybe 2040, that last 12 years, that'll be just breakneck growth. I mean, we'll see everything kind of working. We'll see 90%, 95% clarity as to how it's going to work. That'll be the growth years. And I think when you get to 2040, Bitcoin will be 30 years old. And we'll have moved. The first 15 years were kind of adolescent childhood. The 15 years after that, the teenage, young adult years. And then it'll be like the first 30 years of the internet, right? And from there, it'll be a growth industry, but it'll be kind of a mature, well-understood growth industry. And every corporation will expect to work with it. Everybody will understand it. It won't be this crazy, exotic, complicated thing anymore.
With the ongoing growth of Bitcoin, over time, this will create mass adoption for the asset, boosting its price to parabolic levels. In his recent interview, MicroStrategy founder and executive chairman, Michael Saylor, predicts this. Saylor foresees that no other cryptocurrency will be as recognized and widely approved of as Bitcoin. He argues that this is because Bitcoin is the first and only digital asset that is truly decentralized. This is the original and only crypto asset that individuals, retailers, and institutions would ever need. Let's take a look at Michael Saylor as he shares and explains his latest Bitcoin outlook. Give this video a like to show your support, and subscribe to the channel so you'll always stay up to date with the latest crypto news. Thanks, and enjoy.
So I think what you're going to see over the coming 4 years is progressive adoption of Bitcoin by a bunch of banks, a bunch of various regulated entities operating in every major jurisdiction. I don't think that in 4 years every question will be answered, but I do think 4 years from now you'll have a lot more clarity than you have right now. And that clarity, to a certain degree, will come because of the entrance of the large entities in space. For example, the success of the Fidelity and the BlackRock ETFs will accelerate clarity with regard to can NASDAQ and or other stock exchanges trade options? Under what when can they trade options? There's already interesting movement afoot for the New York Stock Exchange to start trading 24/7, and that's been created by the crypto enthusiasm. So I think you're going to see an evolution of traditional finance organizations. I think you're going to see a lot of lobbying for more precise legal clarity and regulatory clarity. And you're going to see a lot of building, both by new digital assets companies, as well as you're going to see all the traditional accounting and traditional finance operators. They're going to upgrade their systems in order to support this new Bitcoin-backed economy. And it's going to take a lot of money, and a lot of accountants, a lot of lawyers, and a lot of thinking and some time, but because of that action, I think we'll get to a much better place. I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin? And we answered the question, no, it won't be banned. And then the next objection is, but will it be copied? And when we actually see the regulators deny the applications of the copies of other crypto assets, then we will have checked the box. It won't be banned. It won't be copied. If you're deciding whether to build a 100-story skyscraper and invest hundreds of millions of dollars on it, and someone says, well, you either need to use steel or you need to use bronze. And you say, well, which one is the right one? And the answer is unclear. Well, it might be that the bronze is the right one and steel collapses, or it might be steel is the right one and bronze collapses. That paralyzes a big corporate project. But when you get past that and you realize, well, there's just steel, and there is no second best metal for structural civil engineering, once you get to that point, the project moves forward because it's pretty obvious to the corporation they want the 100-story building. They just don't want to be paralyzed by the indecision and the fear of making the wrong choice. So I think that the critical catalyst will be not just the institutional or the regulatory acceptance of Bitcoin as an institutional asset, but it'll also be the regulatory rejection of the alternative.
In other news, the United States is taking steps toward regulating the cryptocurrency market, beginning with platforms like Kraken, Coinbase, and Uniswap. Now, it would seem that it's turning its attention towards Ethereum. And as expected, opinions are divided about such an endeavor. While some oppose the SEC's classification of ETH as a security, Michael Saylor believes otherwise. He believes that Ethereum and other major altcoins should be classified as crypto asset securities rather than commodities. With that, he predicts that the pending Ethereum ETF will not be approved, implying that it, along with other tokens like BNB, Solana, Ripple, and Cardano, will never be accepted by Wall Street or mainstream institutional investors as crypto assets. Do you agree with this? Let us know in the comments. And with that, here are more clips of Michael Saylor.
If you're a company and you want to be able to move money at the speed of light, or if you want to implement the next generation of internet applications by using the Internet of Money, then you're going to be interested in this. It's like we're in the first year of corporate adoption of the Internet of Money. And just like in 1994, that was the first year of adoption of the internet. You would want to do it if you want to stay on the leading edge of digital transformation. The second reason the company want to do it is because the entire world is attempting to beat the cost of capital, and the cost of capital is about 12%, and the capital asset that most of them use is bonds, and bonds very rarely yield more than 3%. So all of their treasury portfolios are invested in something which is generating a minus 9%, a negative real yield, and Bitcoin generates a positive real yield. In the last 4 years, it's been 40 to 50%, so it's 4 times the cost of capital, but 2 times the cost of capital would be magical. And even equal to the cost of capital, if you could simply invest your capital at 12% and meet 12%, then your capital wouldn't be dilutive to your shareholders. So Bitcoin represents an opportunity on the P&L for technology leadership, and it represents an opportunity on the balance sheet to attract capital, preserve capital, and create shareholder value. I think most corporations have their hands full competing on the product side. So most companies have either a very competitive product market or a very competitive service market. So their first mission is, how do I have the world's greatest product or service? Their second mission oftentimes is, how do I do it efficiently? And so in the background, they're always swapping out technologies, and when the web comes along or when the Internet of Money comes along, they'll look and they'll say, well, Right now it's 2% fee, and can I get that to be a 0.1% fee? So they will discover new technologies as a way to save money, or they'll, if we take, say, Cash App, for example, it supports Bitcoin, and that's a new technology that generated $10 billion a year of top line sales. So they use it to differentiate their product. So if they find a way to differentiate or to save money, they'll be very enthusiastic. Then you have, on the balance sheet side, you have a set of financial actions that they take in reaction to interest rates. If interest rates are gyrating to zero, they're changing their balance sheets. When interest rates are going to the moon, they're moving the other direction. And they're, of course, reacting to shareholder pressure. And if the shareholders are saying, give us the money back with a buyback or a dividend, and they're reacting to that. But throughout all of that, right, there is this spreading orange wave. And the orange wave is, of course, Bitcoin, and it is spreading into the capital markets through a dozen publicly traded Bitcoin miners. It's entered through companies like MicroStrategy and Tesla and Block and Coinbase that all have a Bitcoin interest. It's spreading through nearly a dozen U.S.-based ETFs. But now we have Hong Kong-based ETFs, and we have soon Australian ETFs, and we have some European ETFs. Well, as each of those things spread, they slurp up capital. As their performance outstrips gold or the S&P or bonds, they get headlines, and that causes them to creep onto the front page of CNBC and Bloomberg and Fox Business. And that starts to plant some questions in the minds of financial advisors and institutional investors, and they in turn start to talk to other CFOs. And so I think that the orange tide is spreading. I think that corporations, especially publicly traded corporations, will tend to be on the conservative side. You'll probably see institutional investors move before the corporations. You'll see sovereign wealth funds move before the sovereign. You'll see the private companies move before the public companies. But, no, there's no way to stop an idea whose time has come. And the success of the idea will tend to slurp up the capital in the marketplace, because we call them capital markets for a reason. The capital is going to go to where it can find the highest return and where it gets treated the best. And as that capital reallocates, then industry watchers take note, and then the Overton window shifts.
Do you share Michael Saylor's optimism about Bitcoin's potential for mass adoption and significant price growth? What are your thoughts on Saylor's belief that Bitcoin's decentralization sets it apart from all other digital assets? Share your thoughts and join the discussion in the comment section below. If you found some value in today's video, we would appreciate it if you hit that like button and subscribe to the channel. If you want to stay updated with all the latest crypto news, please tick that notification bell. Your support encourages us to continue helping investors stay well informed in their financial journeys. Thank you for watching. We hope to see you in our next video.